good afternoon, or good evening, and no clue what time you're watching this, but it is Sunday, January 7th, just coming on 7 a.m. Eastern Time, and
I'm going to try to get through this. Thank you.
yes, thank you for giving us a red week. We have finally broken the streak of 9 consecutive green weeks in a row on the SPX since Israel invaded Gaza on October 27th, which was the bottom before the impulsive move through November, which we knew was coming no matter what, having had 3 red months in a row. Bullish or bearish, we were going to get a violent bounce. And here we are. We have dropped a total, of 110 points.
Leafs are taking it on the chin, down 6-1.
Now, granted, we did that over the course of 6 days, which was supposed to be the Santa Claus rally, but we only dropped 110 points on the SPX. And I want to emphasize, we have not had a 40-point range in a better part of 2 weeks. Granted, there were holidays. You had Christmas, you had New Year's, but we have not had a 40-point range day. Came close Thursday and Friday, but we haven't had one yet. So, thus, as we go through this, keep that in mind, because very important here, on this decline, 110 points, year of the pronouns is over. We've not had a minus 1% day on any of that. We came close over there. We came really close there on January 3 on Wednesday. We came really close. We didn't even come within inches of one on Thursday and Friday. So we have not had a minus 1% decline since that call it flash crash over there on December 20th, where we dropped 1% in a matter of about 12 minutes. Keep that in mind, because from the bigger, broader, wider view, having explained this in very good detail of how we have topped, your upside potential is very, very minimal. Your downside potential is a wide open window with the elections coming up later this year. But I want to very, very, very much emphasize, as enjoyable as this has been to start off the year, the VIX closing the week right there, very close to that 1339.
Police! 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 Help! Police! Help! Police! Help! Help! Police!
Yep. You need help. And what we mean by this is you need help is you are in a very tight window right here. On Thursday, January 11th, we have CPI. On January 11th, we also have the new moon. So thus, there is absolutely nothing to be taken for granted, because we have had a decent, finally retraced decline, having had that emphasized move to the upside. I'll bring you over to what I've shared before many times. The S&P is your torso, from your waist to your head. The NASDAQ, that's your legs. The Dow Jones is your strong arm. The Russell 2000 is your weak arm. That's the way it will always be. The QQQ has dropped 4.26%. Number one. Number two, it has retraced to the 23.6 retracement from that October bounce, having come down to that 396.27 over there on Thursday, little bit fractionally lower there on Friday, but we did get that green close there on Friday. Have not updated my weekly, which, you know what, we'll go ahead and do it now because why not? The sum of the Friday close versus the Tuesday open, and we closed down 9.09 points on the week. Bring that back over to the SPX. The SPX closed down 48 points, 72-point range, 48 points. And as you can see here, this close here on Friday, 46.9724, fractionally, within a penny lower, 1 point lower from the December 20th low. So it was a nice drop, but we have proven absolutely nothing as of yet. And the window of time for the bears to either take control and get that VIX up there plus 1451, pushing into the 16s, is getting smaller. And if it doesn't happen very early this week, it's not going to happen until the end of next week, because that's simply the way that it works. And as of here, short term, where the VIX is calculated on short-term time frame, calls and puts actions, bullish and bearish action, short term, we're oversold already, and we're still looking for at least a little bit of a minimal bounce. So start getting you into the charts here a little bit. The SPX, I am looking at a 90-day 4-hour chart. Doesn't matter what hour chart I'm looking at because I'm simply looking at a bigger, broader view here. This is the gaps that I shared with you. And as you can see, we have 2 gaps above. Not fantastic. We did fill 1 gap down below. That was Thursday and Friday. And we are very, very far off, not only from this gap from December 6th, which I'll show you in a little bit, bring you onto a 30-day to zoom in a little bit. We have not come to this December 6th gap, and that trend line is sitting there as well, which I don't know if that will show up if I go bigger and broader, but I don't think it will, but we'll see what happens if I do. Yeah, that was the trend line. The highs, all-time highs, coming onto that July high. And coincidentally, like I shared, we were trading the hell out of that trend line. And then all of a sudden, poof, we gapped up above it there on December 6th and decided to go on this euphoric rally up to that 47.78 is the end of the world. So you got a nice decline here, but we have not proven anything at all. We've gotten oversold, which was very easy to do, and we have a couple of gaps up above us. So bringing it into a zoomed in point of view on this, there's your gaps up above. Looking at it from a 50 retracement point of view, which I do believe I need to update. Yes, I do. And that is now a 50 retracement would take you fractionally into the unfilled gap. Right up there around 47.37. This is incorrect, which is pretty obvious. It is 111 points, give or take a penny. So again, it is a nice start to how this year begins, which is very similar, and you can go back and look at this on your own. Very, very similar to how 2016 began. Very, very similar to how 2022 began. Very, very similar to how January of 2018 ended. And we still have plenty of time in the course of the month. So as of now, short term, things are not looking bearish enough to imply opening new positions on downside movement. We are due an oversold bounce. We should have gotten one earlier or later in the week last week. We didn't. So that's exactly what we should anticipate coming this week is a forced, nobody wants to buy this bullshit crap anymore, oversold bounce somewhere into that 47.20, 47.35 area. And we'll see what we're working with as we go into CPI on Thursday. bring over onto the QQQ. Now, as I shared, the QQQ came already down to that 23.6 retracement from the October bottom. Bring it into context there, right? We're looking at a 30-day. So let's go to a 20-day. Okay, here's your 20-day. This down here is still your December 6th, December 7th gap. No, we'll stick with 30 days, right? Here's your 30-day view on the QQQ. And here's your 30-day view on the SPX. So it's very clear the damage has been very minimal to the S&P as compared to over there on the QQQ. Now, Jack, you have absolutely crushed it to begin the year. You had an amazing 2023. I know you joined right in the beginning of 2023. You've completely dialed yourself in so well that I congratulate you. I'm very proud of you that you have been able to make the entire budget for your daughter's diapers for this year from your trading this week. So, QQQ, a lot of damage taking place over there. Very, very, very oversold. And as we are into this oversold region, which again, let me just make sure we'll update this if we need to. Yep, 393.66, 393.66. That is right. We had a 20-point move down over there on the QQQ, and a 50 retracement would take you up to 403.38, which I mean, it's pretty easy to see it over here where 403 is. So possible upside over to 403, perhaps. Would you have the speed and the momentum to be able to drive up to that? That's your question, because I seriously doubt that you are going to have any kind of catalyst that comes out this week and says, oh yeah, here we go, we're going to get a plus 2% day. Could happen. And if it does, that's when you get short again, because we are coming very close to the beginning of the big window. IWM. Again, bigger, broader, wider picture of the entire move of everything, but we'll go here on a 30-day. And as you can see on a 30-day move, it has broken down well below 196. It's now broken down below 194. It is looking as if it wants to go lower, as it is. Broaden this out. Make sure I've got my line there. Where are you? I knew I used to have you. Where are you? I don't have it on here. I've got it on my Russell 2000 and my RTY. Anyway, the IWM is 20% off of its all-time highs. So once again, one of those things that you look at and you say, okay, you are a complete piece of shit and you did what you were going to do, and how every Uber driver told everybody, you need to buy IWM. It is going to be the rally maker of 2024. Well, you're off to a pretty shitty start, down 12 points. So that's our wider view, and it all focuses here on the VIX. VIX 13.39 is your death sentence for bearish movement. Get a drop below 13.39. It is easy. It is incredibly easy to drop that VIX down to 1255. Drop the VIX down to 1255 doesn't mean that you're getting a 40, 50, 80 point rally on the SPX. All it means is you're not getting a dip. That's all that it means. Doesn't mean you're going to see plus 1,000, plus 1,500 tick. It just means that you are not getting a dip. That's all that it means. Simply put. When you get that VIX down in that 12, even below the 12 region, close to that 1189, alarm bells should be going off saying, this is what I want to buy. This is how much money I want to spend. And when you consider that amount of money that you want to spend, open your eyes and broaden yourself out, because there are March expirations, there are June expirations, there are September expirations. There is an election taking place 11 months from Friday. on November. And then you have the December expirations. You can even buy the 2025 expirations. Bigger, broader, wider picture, protection of capital, more importantly, fractional couple of points to the upside on the S&P, 500, 1,000, 1,500 points to the downside. Short, medium term, that's what we're talking about. Now, emphasis, short doesn't mean in a fucking week. So try not to be an absolute moron when it comes to that, which saw a couple of messages during the course of the week, which really questioned me whether or not Robinhood should keep letting people open accounts. So earnings begin this Friday. We've got CPI on Thursday. Earnings begin on Friday, and the earnings begin with the banks. Now, we've had a good run to start everything off. Where are we? Over here. So in the beginning, end of the year last year, after having mentioned it for a couple of weeks, I began the 32 trade plan, SQ. Traded that 80 put, the January 19th 80 puts. Keeping track on it with my spreadsheet. Got into them. It was a one-day trade because that's simply the way that it worked on that specific day, and we reached over 30%. I took the trade off. I took my 30% because I wanted to lead by example. While leading by example and taking the 30%, you had the ability to sit there and watch SQ continue to drop, hit all of our downside targets, which we'll pull up here so we're not talking into the wind. SQ. We talked about, where are you? We talked about 74.42 for the downside pivot and 67.15. We've hit both of those. And those puts wound up going as high as 13.19 on Friday. So January 19th is in 2 more weeks. As you can see, you're up over $10 on a $3 trade. McDonald's, I played much differently. As you saw the email that went out on McDonald's trade plan idea, I hadn't gotten any sleep, so I had the ability to go out and make a video for you to get you prepped. Boom, 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 boom. And McDonald's, I'm loving it. And I had the question, am I going for the 300s or am I going for the 295s? We're still going with January 19th, but I was looking for minus 295 with 290 a big drop. Thus, if I get the 295s and they drop down to 290, 295 minus 290 is 5. If I'm paying $2 for these and they're worth $5, I'm making good money. I'm making greater than 30%. I like this trade. I'm taking this trade. Well, what we wound up getting there with McDonald's, and again, trying to lead by example, just this week was where we got our move. We got our move on McDonald's. Boom. Fucking absolutely gorgeous right there on Thursday. After having dipped there on the day of the alert on Wednesday, closing on the lows, Thursday you got your little pop, and then they rug pulled this bitch. And where did we go down to? Right below 290.14. So as you saw, I closed off the trade on Friday, and I took 620, 213%. They were trading at 740 at the end of the day on Friday. So you already have your alert on Citigroup, which will bring me back over to the chart over here, talking about JP Morgan. JP Morgan reports earnings on Friday. They posted a new all-time high over here on Friday. JP Morgan, I hope I have a cleaner chart to share. There we go. There's a clean chart. JP Morgan, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 green weeks in a row. You go back as far as you want to go back on JP Morgan, you are not going to find better than 7 green weeks in a row. Now, JP Morgan is reporting earnings on Friday. So what it means is where JP Morgan opens up on Monday morning, tomorrow, that is your weekly candle. The open tomorrow. You guys are welcome to do what you want. You're welcome to worship whatever religions you want. You're welcome to choose whatever gender or pronoun you want. You're welcome to choose whatever food you want. Vegan, carnivore. I don't give a flying shit. Me, having been in this game for 28 years, I am going to make JP Morgan my bitch. JP Morgan is going to shine my fucking shoes. Granted, I wear flip-flops. I am trading the JP Morgan red weekly candle after they report earnings on Friday, unless I see an amazing opportunity prior to them reporting on Friday, and I will start getting into a position. And I will be playing this as a lottery. I will be playing this as a obviously shorter term, higher risk. If I'm going to play it with bigger, broader money, I already have Citigroup. So why do I need to have JP Morgan? Because I already have Citigroup. However, I would be looking at JP Morgan from a big, broad point of view and looking at this and saying, you big, fat son of a bitch, I know you are going to break down below 165. So with you knowing that you are going to break down below 165, I would be looking out further dated puts with the 165 strike or higher if you didn't want to go out there and say, Jamie Dimon, drive me to where I want to go because, motherfucker, I own you. So, guys, anyway, it's a very confusing start to the year. And the reason being is that VIX. It was a great drop, fantastic drop, loved the drop, worked out really good with the drop. But it is not bearish. It is not bullish, but it is not bearish. So we're due a bounce this week. Earnings begin on Friday. We've got CPI on Thursday. Next week, we have options expiration as well as Tesla and Netflix reporting earnings. And then we go into the end of the month when tech starts to report and we really kick off 2024.